Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. I am on location at K-State in Manhattan, Kansas. It is the Risk and Profit Conference that's been taking place, and no surprise, folks talking a lot about what's happening in the cattle industry, and we'll talk about part of that during today's Cattle Call with Brad Kooima. You can see he's joining me. He's with Kooima and Varlick out of Sioux Center, Iowa. So let's rewind to last week, because when we started the Cattle Call last week, you said it's cash, cash, cash. We saw cash up $4. This week I say, what's on your mind? And you said the cash. So what's going on in this market?
Well, thanks for having me on. It's always fun to be on with you, Susan. Even though my business is called the futures market, where we got a market that's trying to anticipate what we're going to be in October or December or whatever, it seems like lately the lack of the long speculator has created a situation where the market has to see a lot of proof, and some of that proof has to come from the cash market. We talked for weeks, feels like months, about the disparity between the cash in the north and the cash in the south, the record wide spread, the odd basis, all the rest. The old saying of, a chain is as strong as its weakest link, whatever. The futures market has a tendency to digress to the lowest level, which had been Texas forever. So it was nice to see this spread begin to narrow, where they're finally starting to see some tightening of supply down there in the south. We're starting to fix this regional imbalance, and you're seeing generally an appreciation in the cash all over, but especially some moving up I hear, where you don't have to worry every day whether or not August is too high for fear that there's going to be a bunch of deliveries. So we had a great cash market last week. We're starting out what feels like a very, very good cash market here. I just got 150 picked up from my own steers here about 20 minutes ago. My brother's a salesman. He sold them for me to a regional packer. It's nice when it works, huh?
Yeah, no kidding. So during this meeting, this Risk and Profit Conference that's taking place at K-State, it was talked about some feedlots are offering above basis right now on corn to guarantee that they've got feedstuffs for this fall. What are you hearing? Is there a shortage concern when it comes to feed for our cattle producers?
Well, yes, there's genuine concern, without a doubt. And at the risk of being true to my nature, which is being a bit of a smart aleck, as you know, I would say this: to be careful to not ride last year's horse in this year's race.
Good advice.
We all were beat up, me included, by what was an extreme basis flip in the corn. We were paying $1.20, 30, 40 over, and that was up here in the Midwest. It was even worse than that when you got down into the Texas, Kansas areas. And so, yes, am I doing? Do I think it's a good idea? Yes, to at least have some risk management in that regard. Like up in my neck of the woods, I'm able to buy corn at 10 and 15 under December, starting with November delivery. I've done a bit of that. That doesn't mean it's right, but when I'm starting to look at the ability to buy corn under $6 after what I went through last year, where even though I'm a futures broker, the basis got so whippy that your long hedges did not do what it was supposed to do to protect you against that cost of gain issue. So there's going to be some regional problems this year, I believe, and Nebraska is going to be in the middle of that, where there's a big area there where they're not going to get a very good corn crop at all. I think that there's going to be some regional challenges with some of this basis stuff, and maybe to a degree where I am too, although if you get a little bit east of me, they've had a lot more rain and the crop looks much better. I'm hoping from a feeder standpoint that that'll soften up the basis. I don't think you'll have an instant replay of last year where it'll be that bad, mostly because I think we're thinking ahead and maybe we'll be a little more prepared for that.
All right. Box beef numbers, we continue to see them uptrend. Is that going to continue into the weeks ahead, especially as we get close to Labor Day?
Well, don't you know, Susan, beef's going to go down after Mother's Day.
That's what I heard.
Yeah, I know. Every day, right? For the record, boxes are about $7 higher than they were on Mother's Day. Anyway, I say that just to kind of, putting a little plug in for us producers that don't always listen to maybe what the commercial is telling you is going to happen over there. It would be very normal, okay, to have a seasonal sell-off in both the cash cattle, small one, and in the box beef when you get about 2 weeks ahead of Labor Day. So there's a little push for some extra buying for Labor Day, and then the market seems to shift focus again a little bit back to, okay, the kids are in school, whatever, we're going to buy tennis shoes. I don't know. I think we'll still eat, but that's the stuff you hear. In fact, don't you remember that in spite of the Holcomb fire, the whole reason that there was no manipulation at all is because the box beef always rallies going into Labor Day. I hope you caught that sarcasm. I'm not over that investigation yet. Yeah, right. You can cut that out if you have to.
No.
So I would expect, yes, that we could have a little seasonal weakness in the beef. But who's kidding who? Look at the export data. 3 months in a row, monster exports. The domestic demand, if it was such a wreck, how come the boxes are higher than they were in May? So I just don't buy into this story that it's a demand problem. And now that the supplies are tightening up, we're actually starting to get to a point where, dare I use the word leverage, where we got a little bit, I think the current's running our direction for a change.
And finally, real quick, making a run at some contract highs. Is that going to happen in the next week or so?
Well, you're getting one person's opinion. For me, it's just a matter of when, not whether. I believe yes. Today we filled the gap on that October cattle chart that a lot of line drawers have been talking about since we made it back there in April. Could we have a little pullback from here? Wouldn't surprise me at all. But I think that there's plenty of momentum. But let's put it real practically. So let's say it's the middle of August and I just got 150. Okay, where's December cattle compared to your summer lows? $8, $10, $12 above usually, right? So December cattle are only at 150, at 150, basically on par with today's cash market. I know these are higher levels than we've gotten used to for the last 3 years, but we also have a different set of fundamentals. And unless we have another black swan event, it's finally the scales are tilted in our direction, in my opinion.
All right. Thanks for joining us this week, Brad.
You got it.
I always want to remind folks, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's this week's Cattle Call on the Rural Radio Network.